Hi, this is Matt Meterson of Telemus Capital, the week in review for the week ending February 21st of 2020. It was a down week on Wall Street last week as the coronavirus concerns gripped the markets. The S&P 500 fell 1.3%, followed by the Dow Jones Industrial Average declining 1.4%, and the Nasdaq Composite retracing by 1.6%. The Russell 2000 Small Cap Index was the best performer of the group, falling by 0.5%. Cyclical sectors and mega-cap stocks underperformed, with technology, financials, and industrial sectors falling the most. Defensive-oriented real estate stocks were the lone category to avoid losses. The week had a risk-off feel as U.S. Treasuries and gold advanced, with the CBOE Volatility Index, or VIX, shooting up from a level of 14 to an intra-week high of 18, as evidenced by the chart in the lower right-hand corner. The week started off with Apple announcing that the coronavirus was going to impact its first quarter results. Shares of Apple recouped losses a day later, but the news demonstrated the widening spread of the virus and its potential impact on the global economy. A bright spot on the week was the number of upbeat economic data released, including building permits, which climbed to a 13-year high, jobless claims remaining at low levels, and the Philadelphia Fed Index, which surged to a reading of 36.7 in February, up from a reading of 17.0 in January. Treasuries rallied, which meant interest rates fell. Two-year Treasury yields were down 7 basis points, while the 10-year Treasury yield declined 11 basis points to close out the week at a rate of 1.47%. 30-year Treasury bonds are now offering rates below 2%, with the 30-year Treasury hitting a record low rate of 1.93%. The dollar advanced 0.2% on the week, with gold appreciating 2.8% to finish out at $53.37 a barrel. That concludes the week in review for the week ending February 21st. Thank you and enjoy your week.